Usually we see VCs making fun of founders in shows and events. Well, it's time to make fun of VCs too now. As an LP, you invested in fund one, two, and three in some funds, and you see hundreds of fund pitches. What's the most creative excuse you've heard from a VC trying to explain their poor performance? Or what's the weirdest VC fund concept you've seen so far? Hi, everyone, and welcome to the 24th episode of the VC React podcast. Every week, we bring you insights and reactions from top VCs and angel investors and LPs, reacting to the latest news on startups, VCs, and investment rounds. Let's jump into it with our amazing guests for today. Asjid Hayat, venture partner at Palm Ventures, Dina Toukan, investment manager at ISSF, and Marwan Mohammad, angel investor and venture builder at Gia. And as always, my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA, startup, VC, and tech space. Welcome to the show for the first time, Asjid, Dina, and Marwan. In this episode, we will dive into major fintech moves with Lendo securing a massive facility from JP Morgan, and Khazna raising a new round for Saudi expansion. We will also explore the future of AI with qeen.ai's big seed round, and wrap up with Foundation Ventures' new fund in Egypt. But before we start, we have an LP on the show today for the first time. Dina, thank you for joining us. You've been active at ISSF lately. You've invested in how many? 20 funds?
Yeah. It's 21 actually.
21, okay, great,
yes.
Nice. A new one, maybe not listed on the website.
Not yet. We've signed the end of December, and soon enough you'll hear about it through press releases and signing ceremonies and you name it.
Okay, great. Many VCs watch the show, and I'm sure they will appreciate an overview of your activities and plans in 2025, if you don't mind.
Of course. Just to give a bit of a background, ISSF is a $98 million fund funded by the World Bank and the Central Bank of Jordan. Out of the 98 million, around 88 million is going to commercially driven investable capital. Around 5% of the 98 million is going for support money to incubators and accelerators. This is deal flow money to actually stimulate pipeline, to come up with quality founders and hopefully good startups, to become investment ready. Okay, for the other side, for the other circle of ISSF, which is the investable capital part.
This is not the direct investments. This is just support money to support the accelerators.
Exactly.
Building the ecosystem.
Yes, this is non-commercial money. We don't expect returns to be coming out of this bucket. But going back to the 88 million, okay, so this is the pure commercial money that I was talking about. 90% of the 88 million is going to investing in VC funds from Jordan, the region, and even worldwide. Around 10% is going to investing directly into startups. To date, we have 21 funds in our portfolio that we've invested in, and we have 25 companies that we've invested in a direct manner. We are categorized as a fund of funds. Why? It's because of the mobilization and the efficiency and the multiplier effect. For example, if you invest a $5 million ticket in a fund, you get a much higher multiplier than when you invest, in a company with a $250,000 ticket.
What's the average ticket for fund investments?
So we're capped at 5 million for the funds, for the VC funds, provided that there's an anchor LP, of course, and the fund has a mandate towards Jordan. They believe in the Jordanian ecosystem, because eventually this is why ISSF is here. We want to tackle many issues in the Jordanian ecosystem, whether it's unemployment, female participation. We want more startups to be on the radar coming out of Jordan. This is what we're solving for, actually.
And what's the average ticket for direct investments?
So we're capped at $500,000, provided that we match a lead investor. So we cannot lead the round ourselves. We just need to be the round to be verified by a private sector participant.
And you invest across stages, or you focus on Series A plus?
Yani our sweet spot is around seed series A. We'd like to, when we participate in a round, we'd like to move the needle for the startup, So if you put like a $500,000 ticket in a series B round, for example, of 5 million, it's not going to do much. So yeah, so that's why we have a sweet spot, for going in at an earlier stage, but provided that you are post MVP and you are actually yielding revenues.
Usually we see VCs making fun of founders in shows and events. Well, it's time to make fun of VCs too now. As an LP, you invested in fund 1, 2, and 3 in some funds, and you see hundreds of fund pitches. What's the most creative excuse you've heard from a VC trying to explain their poor performance? Or what's the weirdest VC fund concept you've seen so far? No names needed, of course.
Of course. So look, being a fund manager is not an easy task, okay? It's like running a startup, but you have other metrics to look at. When you evaluate the performance, it's not like you measure, for example, the revenue growth or the EBITDA growth, or for example, the number of employees that are hired. On the contrary, it's a different ball game. We got fund managers to pitch to us at ISSF, new fund managers, first-time fund managers. It appeared that they are not aware of how funds are structured in terms of financing, in terms of expenses, in terms of what are management fees, for example. These are all like a set of new terms only directed at managing VC funds. They think it's much easier than this, but in reality, if you have a GP LP structure, a general partner, limited partner structure, it's much different. We always tell fund managers, you need to do your homework, basically figure out what LPs would look at if you're a fund manager. You need to set up your strategy in a very good way so that you are attracting the right LPs.
Well, you're very diplomatic. You didn't satisfy my itch.
I'm trying to be nice.
You are. Thank you. Well, let's get into the news of the week. Jamie, what's happening this week?
Yeah, thanks very much, Ahmed. Let's kick things off with Saudi FinTech, which has received another colossal vote of confidence, this time from JP Morgan. So Lendo, they've secured a $690 million warehouse facility led by JP Morgan. This to expand its lending capacity, develop new products, increase SME coverage in the kingdom. This is JP Morgan's second large sort of debt financing regionally back in December 2023. They also provided a 700 million in debt financing for Tabby as well, if you recall. Some background on Lendo then, founded in 2019. So it operates a Sharia-compliant peer-to-peer crowdfunding marketplace, so connects SMEs looking for financing with investors looking for short-term returns. Last funding round was a Series B back in 2023, $28 million. This was led by Sanibel, with also participation as well from Sharouk, AB Ventures, and others. Interestingly, at the time, the CEO, Osama, he did hint that the round sort of was laying the groundwork, as it were, for the company's plan to pursue an IPO within the next few years. Again, he was one of the founders who hasn't committed to a date in the future. No specific date or year included, but at some point over the next few years. In terms of, I guess, some context or some stats about Lendo itself and its activity, it claims to facilitate over 667 million in financing across 5,000 transactions, and claims to have generated about $33 million in investor returns as well. So yeah, Saudi FinTech going from strength to strength with each passing week, it seems, nearly at this point.
Yeah, with JP Morgan lending this big facility and this big amount, it's a very strong signal for Saudi FinTech. I wonder, how do you see the relationship between traditional banks and FinTech startups evolving in emerging markets? Are they becoming more collaborative or competitive? I'm curious about your experience and your own portfolio companies or your portfolio funds. Let's start with you, Asjid.
I think it's the ecosystem is developing overall, and there is a lot of collaboration, but again, it's a competing market as well. So you will see as the market matures up, there will be a lot of acquisition from the existing players of the players in the fintech space to kind of broaden their own products. So we recently also heard about STC Pay converting into STC Bank, and like now they are kind of coming into full-fledged market. Revolut is entering the market. So there are big players coming into the fintech space, and existing companies, as like Lendo's performance can show, are growing as well. I think this is great. Fintech is one of vertical that we specialize in. I come from a banking background myself as well. So I'm really, really happy to see the growth coming in, and especially Saudi is a big market, and it aligns with the Vision 2030 as well. Not only in the fintech space, but especially in Lendo's case, we are looking at the SME financing. So that's an underserved market. Yeah, it's all kind of coming together. And then also this the new trend of startups going for debt facilities over equity, or going for like a hybrid system. I think that's also showing how the market is maturing, and more sophisticated investments are coming in, big players are coming into the market. I think this all, as people say in the crypto space, all going to the moon. So I'm really glad on this side of things. Yeah.
I love that. Marwan, what do you think?
I totally agree with Asjad also as well. I think they're both competing eventually. Everyone wants to make money, right? It's more of a competing environment. I think crowdfunding, they're really showing their effect in the market, which in my very small experience with banks, I believe banks, I see some direction in terms of they're trying also to compete with crowdfunding, finding new ways, even competing with pricing as well. So I think it brings a good environment in terms of the end user, the companies who are looking for funding as well. But one idea I would say in terms of regulations, I would think in general sometimes you would see markets they offer loans very easily, like literally anyone can get a loan. And I think that can create a huge bubble, which can crash the economy in a way. So I don't know how Saudi is going to go through that. I mean, everyone is hearing there's a lot of funding in Saudi. They're trying to push so much. So I don't know, will that create a huge bubble that will burst eventually, or will they maintain it very well?
Yeah, there's a huge amount of capital being injected in the markets in Saudi, whether for consumers or for SMEs and companies, and even in startups and VC funds. Dina, what do you think? The traditional financial institutions, are they competing with startups or collaborating with startups? And you see in Jordan, we have even banks creating their own VC funds like our bank ventures and others.
I'm just gonna take one step back and tell you about how fintech has been leading the industries in MENA for the past year. So if according to Magnet's reports, fintech has been reigning as number one top funded industry in the MENA region, which means that there are so much opportunities lying here. Banks are not competing per se, but I feel because people realize that there are certain gaps in the banking sector. So this is why more fintech opportunities are arising. Okay, so it's not about competing, but it's more about complementing each other. Because like now you have startups that provide reverse factoring, for example, or provide escrow services. These are all, for example, needed services by any typical bank, And to answer your question about how fintech is actually growing, I can give you a live example from Jordan. Now we have a fintech incubator, actually. It's called Join. It's part of the JOPAC. It's part of the JOPAC, and they gather like cohorts. They are based on cohorts. They are now on cohort 3. They have startups, actually residing in their own offices here in Amman, providing them with technical services, sandbox regulatory services. They also connect them with banks so that they can have access to open APIs. So they give them like a mock environment so that they can test whatever they are working on in preparation for the real world. So the definition of fintech is evolving. People are more aware of it. People know there are many gaps that they can fill in the market. So this is why it's more of a complement industry rather than just competing with the banks.
There's also Ahli Fintech, and I know that they've been very active for a long time now.
Yes.
But this makes me ask, are those banks trying to influence these startups? Do they slow them down with all the bureaucracy that we know in those big corporations? Or are they trying to solve the problems they have, but they can't solve it quickly, but they use startups to solve it, and then maybe they acquire them or invest in them? I don't know. Are they influencing startups?
Of course, you always hear of, for example, these fintech startups signing with big banks here in Jordan. Because if you can't beat them, you join them. You know how they say that.
Yeah.
So it's much faster and easier to work with someone who's actually like growing rather than creating something in-house, which might, as you said, take some time with the bureaucracy.
Let me fish for more of a contrarian answer. Asjid, what do you think?
Yes. I mean, Dina is absolutely right on this. Like, there are sandboxes environment from the banks, and as you pointed out, the biggest challenge is because there's a twofold. For fintechs to be successful, they need customers. Who has the customers at this moment in time? It's the traditional banks that have it. But because of this legacy system and bureaucracy, and also you have to understand they are under much more regulatory stringent environment that they have to operate very carefully. They're more eyes watching them. Fintechs still have that much open play to kind of go and test the models before they actually launch and they get the licenses and stuff. So they are more able to test different technologies and be agile. So that's kind of like it's a two-pronged situation where you need the customer to be successful, but you also need speed and execution to be successful. So if you go into a sandbox environment, you get the access to data which you can utilize to test your product. But if you come to kind of under the legacy system or bureaucracy, then it's going to slow you down. So it's kind of like you have to balance those two things. And that's, I think, is the key challenge in this market. But yeah, in the long term, you are seen in the developed markets as well. Fintechs will come and create a product which users would love, and then the banks would either acquire that fintech. I don't see them kind of going and launching a similar product that easily, and it always is kind of that balance.
Marwan, what do you think? Are banks helping fintechs or slowing them down?
I think in general, I see it like in a macro level. Each bank's gonna look at their side. If they are able to do it within their environment, they will do it. If not, which is the most common way, they'll need to do a partnership. I see this very often in terms of, if we can say, the crypto side, where there's a lot of new innovation, a lot of new products. As Asjid said, regulation is not really keeping up with the new products. So they're launching new products. These products are kind of traded in a non-kind of regulated environment until departments notice this. They start making new regulations. After that, I see the banks really pushing. So I think there's two sides, which I don't know how to say it in a way. Like, I would say, in terms of the crypto, there's a lot of partnerships, there's a lot of acquisitions, but there's also this movement where if you took a very macro level point of view, you would see that there's a lot of banks that are trying to issue their own coin, and they're trying to have it regulated. So I'll give you a quick example. Here in the UAE, I think it should be very soon, they're gonna issue their stable coin. So it's gonna be same as USDT, but it's gonna be picked with AED, dirham. So this, I see it in my perspective. I see the market here. They trade crazy big amounts in USDT, in stable coins. So what I see is the government, if I explained it very well, is that the government, they saw that opportunity. Then they started partnering with big players in the market. There's few names, better not to mention them. So, and then they're creating their own stable coin. So this could be sort of like partnership, but it's not really a partnership. You're gonna eliminate so many small players. You're gonna have the full control, and you're gonna move from decentralized to a very centralized position. So I think it kind of depends on the market, but in general, I think it's more of a partnership, but on a long term, it's not really a partnership.
Yeah, imagine if the US government creates its own stable coin representing the dollar and managed by the central bank. This is against the core of decentralized currencies, right? With that, I think they will kill a lot of companies immediately if they do that. Or maybe not, because people want a decentralized version of the stablecoin. But stablecoins are on the border. I'm not sure. But anyway, one last thing about Lendo, it's the transparency they have. Let's go through what they share on their own website. And I'm amazed by this. I wish all lending companies and VC firms do that. If you go to statistics here, you can see the big numbers here, but look at these charts. Value of financing over time, and then the number of financing over time. They share their own statistics. They're very open about their growth and everything they do. Look at this, customer concentration profile, the distribution of financing amounts dispersed by city, by sector, by risk profile. They have these scoring systems, A, B, C, D, and prime, super prime, near prime. But also here, the pricing and returns. Profit to investors, look at the numbers growing over time, of course. And this is the gross interest rate, and this is the investor return, net of Lendo success fees, the dark ones. And look at the cost to business. It used to be cheaper to take loans from Lendo, but now it's getting more expensive, reaching almost 20%. And they're very clear about that. If you go to the pricing, they say our prices would be up to 24%. Anyway, here, loss rate by risk, band, performance by cohort, and then credit performance. And if you go to prices, you can see here the invoice financing, they charge 11 up to 24% annual, and they also charge management fee. SME bank financing, 2% management fees. They charge the companies, I checked. And it's not like the management fees for the investors. They charge companies in addition to the interest. Can VCs be open about their performance and returns and all of that? I've never seen a VC firm share all of these details. I mean, there's MEVP who shared the details of the performance of their fund one, but not on the website live.
I mean, I barely saw, I've never seen this actually. But it's a nice idea, you know, to invite investors, to invite, for example, healthier competition in the market. Well done to Lendo. I'm glad we are exposed to them indirectly through Shuruk partners.
Asjid, Marwan, have you ever seen a VC firm sharing all the details? I know this is not a VC firm, but I'm just imagining if there is a VC firm that would share all these details.
I think this is the first time I'm even seeing a startup in the MENA region kind of coming out and being so transparent about their performance. And this is music to my ears. I'm very analytical in many ways, and I like to see these numbers. This tells a lot more story than just words. In terms of whether VCs can do that, I don't know. I'm not sure why they don't do it and what's the strategy behind it. Because this, if I was an investor in Lendo, this looking at this is like, okay, I know what they're doing. And even if I'm not an investor, I'm now interested in being an investor to understand that kind of transparency is always positive. But also, I think it's the other side is because they're doing so good, they can't be transparent about it. People tend to be very careful when they're not doing very well. So yeah, let's see if any of the big VCs in the market can show their numbers and I don't know. It's to be honest, like even internationally, I don't think VCs are that transparent about. They're only transparent to the LPs, which regulatory wise they have to be. And there is so much admin that goes in VCs anyways to add this extra layer. Maybe that is just the operational side of it. It's just too much that people stop. Usually, you will see the portfolio, the AUM, and the fund size. Those kind of. I think 500 is very kind of open about those, like how much AUM they manage or how much return they have returned to like capital they've returned back to the LPs. So that kind of thing.
Yeah, you're right. We might see something like this in very early stages and accelerators. Maybe on AngelList, we can see some statistics, but not really as detailed as this. Marwan, have you seen venture builders or angel investor groups doing this?
Honestly, guys, like this topic, mainly I would see, let's say pricing, maybe some portfolio, but to go into performance and to be that open, it's like a shock for me, and it kinda gives me like this big indicator that we have a strong differentiator than the rest. So it's very fine for us to share our performance, how we reach these costs. I mean, I don't know honestly what is their differentiator, but to go into your cost exactly and show it to everyone, it's a very important, sensitive information. So I guess they have a very strong core competency that they don't care really. They show it and they're strong about
It's
it.
amazing. I saw a VC fund in the States sharing their dashboard, like how many investments have they made, what's the unrealized return on each investment. This is the company I was talking about. It's Unruly Capital. And you can see here for Fund 1, for example, they have a dashboard and the amount deployed, investments, the average check size, and a list of all their investments, investment categories. You can see also here the investment per quarter, top investment location, co-investors, and the companies they invested in. And if you go to fund statistics, you can see the average amount invested, median valuation, average ownership, 2.5%, for example, here. The smallest is 0.1% and the largest is 7.2%. So much details here. The companies they invested in, some more details on the fund. And here you can find all the transactions in detail, how much they invested in every company, when, the location of the company, and of course, links to those companies. Here you can see the team of this VC fund or VC firm. And lastly, here you can see their previous investments from Fund 1 or Angel, from what they call Fund 0 or the Angel investments. Anyway, Jamie, please take us to the next story. What else do you have for us?
Yeah, let's maybe skip fintech for a second and jump ahead to AI, if that's cool, because I am keen to spend some time on this in particular, because really interesting company, interesting concept, and really strong founding team as well. So this is qeen.ai, Dubai-based. They've just raised 10 million to scale their AI-powered e-commerce automation. In terms of lead investor, we've Process Ventures, a major e-commerce investor, other investors, Mohammad Capital, 10x Founders Fund, and Dara Holdings. In reality, it's one of the largest seed rounds as it relates to an AI company in MENA. Could be the largest. I have to double check that. In terms of what qeen.ai does, provides AI-powered agents that automate marketing, content creation, and conversational sales for e-commerce businesses. So I guess the differentiator is it helps small, mid-sized businesses compete without relying on expensive agencies or having to have deep sort of ad expertise. So they have their own proprietary reinforcement learning UI tech. So it learns from customer interactions and refines marketing strategies in real time. So an example of this is dynamic text personalization. So for instance, it'll adjust content based on user behavior and device type. So an iPhone user might see like quick bullet points, whereas a laptop user gets a detailed paragraph. In terms of progress so far, they raised a 2 million pre-seed in 2023. So it's 12 million funding now in total. Key clients, Dubai Store, Sixth Street, Jamia. They've served 15 million users since launching in Q2 2024, generated a million SKU descriptions, and allegedly have helped merchants increase sales by 30% as well. On the business model front, it's a subscription-based pricing model with a value-based pricing approach. So there's two main revenue streams. You've content automation, so businesses pay per SKU. It's typically like 10 cents, 20 cents per SKU per month. And then they also have an AI marketing agent as well. And pricing is based on the per interaction volume there as well. In terms of the team, the founders all come from Google and DeepMind. So obviously a very good understanding of AI there. So the CEO is a former DeepMind researcher who led a team focused on self-learning AI agents, which always helps. CTO, ex-Google Ads, CBO, also ex-Google Ads. So really, really strong grounding on the AI and e-commerce intersection. What the founders have stated is that they're looking to build MENA first. Although they're trying to build a global AI company, they're starting with the MENA region first. And they've also attracted talent from Silicon Valley and Europe to actually relocate to Dubai and Jordan. Do you think that in relation to, I think we raised it last week related to Money Hash based in Silicon Valley, but building for the MENA region, do you prefer founders building for the MENA region located in the MENA region, or do you think, does it matter where they're based?
AI is again another vertical that we heavily look into, especially. So we have a sister fund in Silicon Valley, which is purely AI focused. So we get like access to AI deals a lot from that. So in terms of people building outside MENA for MENA, I think MENA is not that simple, or it's just a very complex region as a whole, not only in terms of their different countries with different regulatory environments. There is a difference in culture, in different problems that each of these countries have, and the stage they are at in their development of technology as well. So if someone is outside MENA, as long as they have a good understanding of how these intricacies work, that's fine. But I think being on the ground gives you an unfair advantage. I think the longer time you spend in the MENA region to understand the region in itself, I think you will just have an unfair advantage. If you can attract talent from outside and bring them in and build with them, I think that probably is the best of the both world scenario.
Yeah, Dina, would you invest directly in a startup that's located in the US but targeting the MENA region?
For us, it's more about Jordan than the MENA region. Going back to our mandate, our main focus is Jordan. If you have Jordan on your radar and you believe in the ecosystem, then great, we are happy to consider you. We believe in the Jordanian talent, and we believe what comes out of Jordan is something that is of quality. So if we find that, even if you are based in the US, we are happy to consider you.
Yeah, because
you
you're a
can be,
mandated fund. Yeah, it's
yes,
different for you.
yes. I
And
mean, you can
usually we
be
see some
anywhere.
companies have offices in Jordan, like kitchens. The technical office is in Jordan, but
Yes.
sales maybe would be in Saudi or somewhere else.
Yes, that's becoming the natural distribution of having, a back office in Jordan, whether it's a kitchen, whether the tech team is being located here, you name it. And it's relatively cheaper, than being located anywhere. We're honestly very happy that, more and more people, more and more VCs and startups are being aware of the talent that's coming out of Jordan. So you can be anywhere in the world, okay, so long as you have, significant operations in Jordan, whether through hiring a team, having an office, having, as I said, a kitchen, the tech team located here.
Yeah. Marwan, what do you think? Do you prefer investing in companies that are building in the MENA region for the MENA region, or you don't care if they are located anywhere but targeting the MENA region?
Wherever that company is, the startup, if they're able to target that specific country with their culture, with their environment, and they know how to approach these users, the clients, all of the stakeholders, I don't mind. So it eventually, in a very short answer, it depends on how is their implementation. Is it generally focused on that specific market or not? If it is, and if they know that market, why not? It seems a successful business. But if they are copycats, where some investors, they would see a business that is operating very well in the US, they would copy it here and they would invest immediately. This I wouldn't recommend at all. I would suggest that, okay, it works in the US, amazing, fine. Will it work with our culture? Let's say if we're assuming, as Dina is pushing a lot for the economy of Jordan, if we're saying it's in Jordan, will it be compliant with the culture, with the environment, making all stakeholders incentives at all time? Does it work? If it does, of course. If they're just gonna copycat whatever they had there, I wouldn't invest at all.
Yeah, imagine if, for example, Kareem was started in the US for the MENA region. I don't think they would have done the success they had so far if they're not on the ground talking to the city governments and talking to the captains and building rollback network. Anyway, let me dig deeper into what qeen.ai is actually doing. With OpenAI and other major players developing their own autonomous agents now, like what we've seen with ChatGPT and the browser agent, how do you evaluate the competitive moat for a specialized AI company like qeen.ai? What unique advantages could these companies have when competing against global platforms?
If we're talking about an AI technology, it depends initially. Let's say, let's go towards the technology side, right? So if we're gonna take the technology as a differentiator, if it's a GPT wrapper, then no, it's not gonna be at all. If we're talking about fine-tuning an AI engine, and if we're talking that they have the data, then the data itself could be a differentiator. Fine-tuning an engine and reaching to a engine that is effectively getting good results, that's also a differentiator. But eventually, you think about it, it's not going to be for a long term. as we saw everyone with DeepSeek, these guys went and showed everyone a huge difference in the market. And in my thoughts, I would see that they literally showed that fine-tuning an AI engine and having all your data is not going to be really a long-term differentiator for you, because the technology is always improving and it's becoming, maybe, let's say, I'm not a technical guy, but what I understood, it could be easier to fine-tune AI engines in the future. So I would say that part. The second part would be to genuinely find a barrier to entry, like any other startup. You need to have it. It could be of having a lot of partnerships with the strong stakeholders, attracting exclusivities. It could be the knowledge behind that engine itself, let's say. Or it could be as simple as UI and UX. Because I can see also right now there's a lot of interest from users that they don't want to have a product that can give you so many features, but for each feature you need to press so many buttons to go through many things. A lot of them are inclined more towards the simpler one, which could be ChatGPT as one demonstration. It has so many features. If someone wants to really utilize it very well, you really need to dig deep and learn even coding as well. But if you want it for the general purposes, it's amazing and it's very easy and simple. So it could be also that as well.
This company is focusing on e-commerce. So they're trying to find their own niche, and they're trying to solve e-commerce companies with AI, with their AI agents. Do you think this would give them an edge, or maybe ChatGPT and DeepSeek now and other big players will start creating those specialized agents in the future?
So I am going to like exactly what Marwan said. The moat from the tech side of thing, I think it's one of those things that has, by introduction of DeepSeek, is just kind of now been completely destroyed. Like anything can come in very quickly and destroy the tech side of things. So what if you can't get a technical moat? What other moats can you get? So whether you have the commercial side of things, so okay, you have access to market, or you have understanding of the market, which no other player can have. And that would be the key differentiator. And when we start talking about these big players, yes, ChatGPT is going to create their agent, but is it going to be relevant for e-commerce, relevant for MENA region? Would it understand the intricacies of that? Like, so it's coming back to the same thing. Like, if you can create a product which is very centric to MENA and very centric to the industry, for instance, in this case, e-commerce, and you have gathered enough data to train your model to kind of like create a product around the user experience, around what people actually want, you will eclipse the kind of like the introduction of any product. You've seen this with Perplexity as well. They have gone through the roof, and they are now, I think, model agnostic. So they're using Claude as well. They're using ChatGPT as well. They're also using DeepSeek as well now. So the model doesn't really matter at the end. What matters is, A, can you acquire users? B, are users loving your product? So that I probably think is going to be the big thing, because if I had to go and do the same thing on ChatGPT, I probably would be able to do it, but it might take me hours of prompting it and getting my prompt ready and fine tuning that prompt. But in this case, that work would have already been done, so I could just literally go and do it. So I think that the moat, how we look at moat is going to be different now. So I think it's from an investment perspective as well. We have to be more kind of wary of that thing. And the other thing for me is, when especially looking at the AI side of thing, is what is the value prop? So how much value are you driving? Like in this case, I think they claim this 30% sale increase using their platform. So that is my main kind of concern. So when I look at it, is the actual value being driven to the customer? And that is the game.
I think from a reporting mechanism perspective as well, like sure, OpenAI can introduce perhaps an e-commerce agent, but are they going to dedicate that time in terms of, I guess, communicating the ROI on that agent itself? Is that going to be tailored to the region? Are they going to offer integrations? Like, for instance, Qeen, I know that they have integration with Shopify, but they have an integration with Zid as well. Like, I can't imagine that, you know, OpenAI are going to be introducing an integration with Zid straight off the bat. And from a technical perspective as well, I think we've seen with vertical AI agents that you don't need to have colossal models with billions of parameters. In fact, fine-tuned models with domain expertise can be a lot smaller if they're trained on the correct data. And again, regional specific data, I think, will help to that end in terms of fine-tuning that further. I think timing is going to be a big thing, as you guys have touched on.
Dina, what do you think?
I'm going to zoom out a bit. Sorry, I'm talking about things from at a high level from an LP perspective. We know the emergence of AI has been upward sloping. We know in 2024 AI captured around 38% of global VC funding. We are aware that the world is going through that direction, okay? But whether you are applying it directly to your startup and operations or not, I feel this is where things are heading right now. So you need to ride this wave, and you have to encompass or incorporate AI in any of your operations. That doesn't mean it will completely replace current functions, for example. I feel it's more of a complement. I've come across a number of startups that operate or have AI embedded as part of their operations. For example, such as Teammates, previously known as qeen.ai. I know now they have like AI agents replacing, for example, marketing and sales. But does that mean they are, laying off actual sales and marketing employees? No, it's just a matter of complementing what they do. Okay, AI can handle more than one job simultaneously with higher efficiency, correct? But that doesn't mean you are completely erasing or replacing current actual talent. Okay, that's for sure. Maybe we will get there one day. I have no idea, but I think that's a conversation for another day. But all in all, I feel AI is facilitating, it's streamlining a lot of operations. And if you want to actually apply AI, to startups that are in the MENA region, the advantage is that they have the ability to localize the services, the model that they are offering to meet the MENA needs and demands.
A very interesting point, because I'm seeing some companies training AI employees. I don't think ChatGPT or DeepSeek will get into that. They're just the general model, even if they have agents. But now we're seeing some companies creating those personas, and they give them a name, they give them an image. This would be your employee, and that employee will work for, I don't know, 15, 20, 500 companies, but it's the same character.
Yeah, it's weird. Like they can handle maybe 10,000 phone calls, in 1 hour, for example, as part of the customer service. I mean, this doesn't happen with humans. So this is something that, AI is more of a plus to the current business operations. But does that mean the AI can, operate on its own? I don't think so. There has to be like some form of human element to oversee what's being done under the AI operation.
I just wanted to add on to that. I think we are very quickly moving from the LLMs to agents, and then the next layer is going to be the apps for the agents. So kind of like the whole kind of iPhone to App Store to actual apps that were built on that. So even if there is agents being built by OpenAI, you will still have that opportunity to build those applications, which agents then will call upon to do certain tasks. So it's just like agents, just imagine agents as humans to complete certain tasks. They'll still need to access certain applications, and that would be the next layer. So there's still plenty of opportunity to build on this.
Future is always bright and complicated, Jamie.
That's for sure.
We didn't get a chance to talk about Khazna and their new round to expand to Saudi, neither talk about Foundation Ventures and their $25 million second fund. So congrats to both. And hopefully we can have the Foundation Ventures team soon on the show to talk about their fund. With this, thank you so much, Asjid, Dina, and Marwan, for joining us today. And we would love to have you again soon. And Jamie, as always, thank you so much for bringing us all those news.